weekend all. Ira Epstein with your Spider ETF stock wrap up, and this is your weekly edition, and this is for November 18th, 2022. All right, interesting time. Now, we have coming up the Thanksgiving holiday. The markets get abbreviated trading hours, so you'll get Monday and Tuesday semi-normal trade, but Wednesday will start curtailing back. Unfortunately, Wednesday's going to be an important day because at 1 in the afternoon, we get the FOMC minutes. And I think traders will pore over that, looking for clues as to what the Fed's doing. I don't know why, because every Fed member that's come out so far has said very clearly that they are all in favor of further rate hike in December, and they may split after that. Now, why do I say that? Because I think that before the December meeting comes, we get to see CPI and jobs data for the month of November. If the CPI is very weak, while they may go along with the rate hike for December, they'll be fighting about the one coming in February. If the CPI wobbles back and gets stronger, then they've got to say, well, we haven't beaten the beast down, we got to go a bit longer. The big battle isn't about rate hikes. It's the size of them and the duration of them. That's what this is about. 75 basis point hikes, I think, are off the table. 50, maybe at 25 on a real weak readings at the beginning of the month and CPI and labor comes into play. But right now, the market, if you watch the Fed Watch page from the CME group, 50 basis points is the overwhelming favorite for what's going on. And then the fight begins as to when can the Fed pivot. I am not of the opinion that it's as soon as people think. I'm more of the Jim Bullard school that we've got to prove that the trajectory falls, and it keeps falling. He went up to as high on a normal, now 5.25 is his nominal rate. And if inflation gets sticky and holds, he's talking 7%. Dr. Doom, right? Remember, that's another person that's been talking that it has to go up there. So you have to pay attention to all those things and work with them. Now, instead of going to DraftKings, I wanted to go back to Amazon and do that as the feature this week because we're talking about shopping. It's here. I know in Chicago we get our big parades. They start tomorrow. They shut off Michigan Avenue and you get all the craziness going on. And it's the start of the shopping season. So it really is going to kick in. There's no glory in Amazon. This is looking really like an ugly chart. It doesn't get a bounce whatsoever. You've got the items coming down. They're not looking that good. Even Jeff Bezos was saying you don't go out and buy cars right now and big durable goods orders because he's fearful that the recession's going to be worse than people thinks. I don't think that anybody's arguing that we're not going to get into a recession. I think that's where we're headed. If labor stays strong, it's hard to get into a deep one. If labor weakens dramatically, that would be the case. If you're watching the Fed talk, they're all saying, well, there's concern about service sector inflation staying strong. In other words, the waiters, the people that come to our house and fix things and all that. Yeah, that's there. I had somebody come out just recently to look at my electric panel. And I used to pay $100. He looked at it, found nothing wrong, and was gone in 20 minutes. $250. And this is through a friend of mine. So I see the inflation firsthand. As it turned out, we call it Commonwealth Edison. They had to go up on the pole. They found a bolt was in wrong for, God knows, 20 some odd years that had fried. They changed it. Everything came back. It was causing some of my internet problems and other things for years. Didn't know that. Finally, we had part of the house lose its power. In any case, so I look at this. There's nothing friendly here. This market's down. It's under the 18-week average, looking weak, but I doubt it's going to be able to stay under the Bollinger Band because you don't. 95% of the time you stay within it. So I can make an argument that this may be one of the last hurrahs, and if we start taking out the highs of this week, that'll be the sign that maybe the market's overdone it. We're going to get a bounce. The problem is there's nothing bullish. And that bothers me going into the season because I don't know about you. I use Amazon like mad to buy gifts, send gifts, and I am sure that most people do All right, that's not to say you don't go into the stores. There's nothing like going into the store, and I'm all for it. All right, but I don't want to go through the hassle. I don't want to catch the flu. I'm very careful about what I do. Momentum-wise, not embedded, but getting close to doing it. You need 3 weeks in a row at least where both numbers are underneath 20 to have an embedded scenario here. Not going to be able to do it. Like I forgot to change something, I think. Let's see if it'll let me. Nope, it's doing it at the top. I see what it's doing. But you don't have it yet. Let's leave it at that. KBE. You're really stuck at the 18-week average, and you're stuck in sideways trade. It is neither an up or a down trend. There is no trend. You're just spinning around in here right now in this bank index when you look at the weekly chart. When you go to XLI, it is still bullish. The industrial sector has been stellar. We have seen that. It's the tech sector that's been getting hit, not the industrial sector, but you're getting rich in the tooth, okay? Do you see that little long in that tooth would be the right saying. 82 right there. Rich is when you get all those gold fillings and all coming up. And I don't like that it's sort of starting to stall again. It did it before at the 100-day average. So I'd be very cautious. The market's almost saying it wants to pull back a little bit. I'm not bearish, but it's acting that it wants to pull back. The energy sector starting to break down. Be careful. Rumor is that China has asked Saudi Arabia it doesn't need as much oil. Now, it's not going to say that of Russia, since Russia's an OPEC Plus member, and they're buddy-buddy at this point in time. So it's easy to say to the Saudis, well, if the Saudis don't sell to them, Saudis got to put it out somewhere on the market, breaks the general price, because China's been a big taker of oil. I think this sets up, if there's truth to that rumor that was out today, I think it sets up that come December, which is right around the corner, that the Saudis are going to make another production cut. The reality is they can talk 2 million barrels all they want. They probably equates to a couple of 100,000 barrels and no more than that, if that. And that's because of how the line goes on within OPEC. But you are getting increased production out of some of the African neighbors, and that's good for them. In the meantime, the swing players, they're going to have to absorb more of a cut, and I think they will. But you're getting that embedded reading. So the break in it, I welcome. This could set up a buying opportunity longer term. Let the market come down. Would I ever tell a client to buy a Bollinger Band? If you've taken my course, the answer is no. That isn't going to happen. In Freeport, you're up to the upper band. I think you're ready for profit taking in copper. I can make an argument in copper. Down here, I've been watching the futures break as China continues with its lock-ins. I don't see anything fresh that I'd want to do there. In GLD, I have doubts that you're going to get up to this number. It just doesn't appear it if the dollar picks up from here. What's going on is an inversion. It's very easy to see. As the dollar's been breaking, gold has come alive. Therefore, logic tells me if the dollar rallies back, then gold probably comes under pressure again. It's the only thing it's got going for it. It doesn't pay attention to the Ukraine war. Inflation's been here. It hasn't made a move. Does this look to you like it's made a move off inflation? Am I blind? What's going on here? That's not it. So the only other play that's happened is as the dollar's recently broken, that's worked there. In the gold miners, you're up to the resistance point of a Bollinger Band. I teach the first time you hit that, the pros take money off the table. In ARC, again, she hasn't done too well this year. And now she's buying Bitcoin down here to be a hero. Okay. I read that today. I went, okay. I don't get it, but whatever. My experience with these events is that they take on a life of their own and that the fallout continues and it doesn't go away 1, 2, 3. Once you get the regulators involved, and believe me, they're involved now, things get even worse and then the books are open and you realize it's all a house of cards. Watch out. That's what I think you're going to see. I've given you my scenario. Apple, you're in a resistance zone. So while the daily chart looks good, the weekly chart does not look good. This is where the pros, I think, are selling on a weekly basis. I think at 157.50, they'll call it a day and won't be short anymore. But I think that they're putting on their shorts in this area basis, the weekly chart. Tesla, Mr. Musk, please pay attention to your big company. This is not looking good. This is a company that is making new lows on the move. Now, I have told you that I'm not enamored with Tesla for the reasons that I've given. There are so many new electric cars coming out from worldwide. I don't care if it's a Kia, a GM, a Ford product, a Lucid product, a Rivian product. The names go on and on. I haven't even brought up the Chinese names that are coming to town. You've got choices. You didn't have choices for years. This was the standard. I am not saying it's not the standard now. I am saying there are choices. And with choices, you lose market share. That is the law of economics. And with that, you've got to ask what's going to make the market value hold up. I'm not a fan of this stock at this point in time. Give me a chart pattern to work with, fine, but this is a bearish pattern, not a bullish pattern. Meta, when you look at the daily chart, you can see the big rally we had. Did anything change here? No. Now, what would get my attention is if the slow stochastic reading, the red, closes over 21 this week. Then I'm going to be looking to get back to this number, 142.38, unless this low is taken out. But right here, right now, I think the pros have been selling it off the weekly chart. I think they're nervous because any close over 21, I think they got a scoop. In TLT, this is short covering, new buying, I don't know. But there's on the close today, you see the reading at 23.53. What's the chart screaming? Don't be short anymore. Don't be short. That's what it's screaming. Because when you lose embedded readings, you often get a rally back. It's the start of something. So I think the smart money got out today and went to the sidelines. Now I cover this and a heck of a lot more for you on a regular basis in my twice daily updates that I want to give you for free. I want to give you 2 weeks access to my Spider ETF, morning subscription video, to my futures if you want that, to my twice daily written updates, and charting software. The package is worth about $130, $140 for a 30-day period. Giving it for 2 weeks free. Choose the parts you want and away you go. How do you get it? It's simple. You can take your cursor, move up here. You'll see free offer icon. Click it. Fill out what you want. We'll get it to you and you start your pattern. Now, how I write my letter, I think you'll love. It's written for Spider people, ETF stock, and all. I write it as though it's an outline. It's meant to be read in 2 minutes or less. That's how I write. That's the attention span I want from you. I'm not writing a book twice a day. I'm writing a letter with pointers, pointing you in directions. What are the events taking place? And then the videos are what really does the job. These are the baby videos. The meat and potato video is the subscriber videos. I'm going to repeat. Those subscriber videos are in the morning. So when I put those out, you will have access to them. You can call us. You can go to our website under free offers or just click it up here. Either of those ways will work. I'm Ira. You have a great weekend. I'll see you all come Monday.